And this comes as the stock market continues to climb to new highs, which our next guest says will continue for at least 3 more years. So are young people at risk of sitting this historic rally out? Let's bring in Carson Group's chief market strategist and CNBC contributor, Ryan Dietrich. Welcome. What do you say to these people?
First off, thanks for having me back. It's always fun to do this in your city. It's unfortunate because long-term stock market goes up. We can get into all that. But, there's that same survey that Pippa just talked about. Gen Z would rather gamble on sports than invest in the stock market. And you hear that, what we do, I've done this for a long time, you have too. It's just a real shame. And I guess all we can do is continue to show them longer term, you're going to make way more wealth in the market.
What if they go, what's the big deal? I'm spending $75 a month. That doesn't build me anything in the stock market.
No, that's true. But then you look at, as we've all seen these numbers, if you do that when you're 20 to 25 years old, every week, every month, that compounds. And now I don't have the exact number off the top of my head, but it's a huge nest egg. And let's be honest, market's up 7 out of 10 years over the long run. The rule of Joe Montana, real quickly. Every 16 years, the market's always been positive. Yes, every year, 7 out of 10, every 5 years, like 85%. Over time, time is your friend when it comes to investing. And this short-term feeling we see in the market, it doesn't work for most people, and this is unfortunate to hear.
It's also always worth shouting out the fact that the market goes down is why it has such a good long-term reward. If there was no risk, there would be no reward. So it's right. Those very pullbacks, the down years, the hard times that still make it generate a good return over time. All of that to the side. The larger thing, I think, is this sort of this loss of faith in the stock market. And the funny thing is, I think this is not unique to this generation. I remember feeling this way when I was younger. Yep. And again, it came in during the financial crisis, which if you ever wanted a sign that maybe the status quo wasn't working, that seemed to be it. It was also an incredible entry point.
Yes.
So being out and thinking that this is over and none of that was the right bet to make for the long run. So the same surveys show people are skeptical about AI and all of that. That's the very part of the market that is doing the best right now. So how do you quell these concerns?
I can one-up you. I started in 2001, the lost decade. I invested for 10 years. Literally, my 401k was negative after the first 10 years of investing.
Wow.
So you think about, that's that. But we're on the other side of that. We're in a new secular bull market. These are the themes I've been talking about with you for a while. This bull market right now, assuming we make new highs, is like almost 4 years old, right? October will be the 4-year anniversary. Look at that's the 8th longest bull market since World War II. Look at the other 7, Kelly. 6 of them made it to at least their 5th year, an average of like 7 years. Listen, I'm not saying it's going to go that far, but we are saying history says these can go a lot longer than you think.
You lived through everyone's big fear.
Yes.
Which is
twice.
Yes.
Got cut in half twice.
Yes. So and they go, but what Ryan's saying is going to happen to me. I'm going to get into the market at the top, and I'm going to go through a lost decade with my money, and it's not going to be worth it. That's the fear. How do you speak to that?
No, it's a legit fear. Now, listen, in the 2000s, call that lost decade. Yes, the U.S. market didn't do very well. Look at how gold did, up 11 years in a row. Look how bonds did pretty well. Look at how value did pretty well. So have a diversified portfolio. I know it's kind of cliche to say, and almost kind of boring, but that's kind of boring wins in this type of an environment. You mentioned sentiment. Just today, we saw that AAII sentiment poll. I get it. Same group. They're always kind of crotchety, if you will. 4 weeks in a row, more bears than bulls, okay? Bulls went down. I mean, this market goes up and people feel more miserable. Honestly, for investors and people watching the network, that's music to our ears from a contrarian point of view that this bull market isn't over yet.